Hi, good morning, everybody. This is my morning brief. So before I forget, be sure and like this video if you like it, and retweet me on Twitter, please. I need as many viewers as I can get. Gumby9662C. If you're not following me, please follow me. And we'll see what happens here from now. So basically, some things that I got going on here on my bigger term charts here. These are my long-term upside targets. Okay, and we actually came off a long-term upside target yesterday. Okay, and rejected that hard. Okay, so now we had discussed it in the room. We're probably looking at 3750 for a reset, possible reset here. So be mindful, maybe some downside action for the rest, for today going into, we have Apple and Amazon reporting later this week. Here in just a little bit, we have Boeing reporting. Okay. So do have some of those things happening here. I think we do have a very high odds that we're going to come down to 38.19, like a 90 plus percent odds. We're going to be down to 38.19 at some point today. So possibly even before the market opens. So definitely keep that on watch. I have my watch list sorted by market cap. Okay, this is what's happening in the pre-market this morning. Okay, obviously Microsoft and Google got destroyed on their earnings. Down 6%, both respectively. To start our session today, all of tech is down in response to that, except for Chinese internet. And Chinese internet got destroyed after comments from Xi on Monday. It's a big robbery going on here by the Communist Party. Stealing public assets, bringing the shares into the Communist Party. So that's basically what's going on there. They just keep driving down prices to where the party can take over these companies, and that's pretty much what I see happening, and I'm sticking with it. So, but basically, we've seen a rally in these Chinese internet names this morning because they were ordered yesterday to start buying up equities. So they do have 22 or 44 trillion dollars in reserve, communist dollars, yeah, in the People's Bank of China. So they can literally buy up all these equities on pennies on the dollar, and bring those shares under the umbrella of the Communist Party. So basically, they've been ordered to buy up these shares. So be mindful of that. That's why the Chinese market is rallying right here. Another thing that we're looking at here today. Give me a second here. USD JPY. Big thing going on here. So we got this going down here. So basically, what we got going on here is Bank of Japan uh, came in and bought up a bunch of the Japanese bonds. Okay, so basically they're monetizing their own debt at the expense of their cash reserves. Okay, so basically they're drying up liquidity in their economy. So basically they issue all this debt, so they make sure they have an emergency fund, that their economy stays very liquid. Well, what they're doing, they are literally, buying up this debt because there's nobody else in the world currently wanting to buy this debt because of the strong trend, uh, negative trend going on in the Japanese market, the Japanese yen. And so what we got going on now is a little bit of rally in the yen as they monetize some of this debt. And this is really a bad scenario. So ultimately, what's going to happen here to save Japan, to save the yen, we're going to be seeing other global banks forced to buy up the yen, or to buy up, or buy up Japanese debt. We're heading that way. It wouldn't be surprised me at all to see huge amounts of Japanese debt going on the Federal Reserve balance sheet here in the U.S. So be mindful of that here in 2023. That our U.S. Federal Reserve balance sheet's probably going to be starting loaded up with Japanese debt to save the Japanese economy. So and if we lose the Japanese economy, then everything it's all over with. Okay. And so that's the next big shock to the markets, that they're going to be, that the Fed's going to have to start buying up the Japanese debt, Japanese yen. Well, not necessarily the yen. All they have to do is buy up the debt to stabilize the yen, and that is probably coming. So don't be. You heard it first here, okay? So be mindful of the what's probably going to happen to save the global economy. Okay, and so Tesla, I'm looking for a lot of chop here over the next. We're probably going to be down into the 212 area today at some point. Kind of thinking of that. Like I said, the China internets. I mean, you know, you're trading against the Communist Party, so you're trading with the Communist Party, whatever. So, do with that whatever you want to do. So, not really investable for me. Uh, Ultimately, we could have higher targets on this stuff. I do want to say though, I do think we hit a major milestone yesterday. Uh, let's see here. Let me go on my bigger charts here. One second here. So two main indicators that I use in my charting. Right here, this is CPR. Okay, and maximize here. Central pivot range. We use that on our charting, in our group here. And so basically, what we had going on yesterday here on ES's, or was it SPY? Yeah, SPY, I think. One second here. Yeah, SPY was it. So what we had going on here on SPY yesterday afternoon, uh, we came right up into the uh, monthly CPR high. Okay, and I was calling that out in our trading group, and we are finding resistance. Okay, so ultimately, what we want to be looking at is a correction, and so we have found some significant resistance, with included with some pretty bad earnings results this morning. So yeah, we're looking for a reset. This looks like a wave 3 pattern into a resistance. Okay, so we're looking for a wave 4 to build out here to finish off our week here to the downside for a potential move higher next week. So what I'm looking for next week is a potential solid test of the monthly CPR high. So we came a little bit short as of yesterday into that CPR high. So that puts us up into the 38.85, 38.90 area. I think we're still going to be going up a little bit higher here in the markets. So what my primary thesis is that we're probably looking for a little bit of reset for the next couple of days, and then we might get another push into next week. So be mindful of that scenario. That's a primary thesis that I'm looking at right here, going forward here. And then also, I was also looking at why we rejected yesterday. Go over here on my Ichimoku. And I've showed you guys this before. I've got two Ichimokus that I primarily use. Uh, you have your standard. Let me zoom in here real quick. So you have your standard Ichimoku right here, that you defaults and stuff, and you always have to have that up, to understand how price is reacting to with what this is pretty much what most people in the world use. But I do have an accelerated. This is my momentum Ichimoku, and it's set up with 5, 13, and 9 settings on Ichimoku, and I also have the MACDs, corresponding MACDs down here. Okay, and so our MACDs down here, we are starting to, our signal lines are crossing bullish here on our momentum line. But my main takeaway is that right at day highs yesterday on my momentum itchy, we got right at the top of the cloud, okay, on the daily time frame, and that's what we rejected. And that was basically the same time frame we were rejecting the CPR high, on the SPY. So, uh, so there was a little bit of correlation there going on. And if you put the SPY up, let me see how it acted. It's the same point in time. Yeah, similar situation. Uh, the SPY was right here into the momentum high yesterday, and similar situation, similar chart. So basically, yeah, we're still pretty darn bearish here on our signal lines. We're still well below still our even our zero line here on our signal lines. So be mindful of that going into today's trading session. So it looks like to me that we're going to be opening here. Was it 381.79? So we're going to be right here, smack dab on our 50 SMA to open our session. So be very mindful of that. You know, they tried to take us above, and we're going to be opening right on that 50. So be quite mindful that we could be losing that 50 quite early this morning. Uh, but then again, anything can happen. They can save it. Uh, yeah, but so yeah. So we're at these pre-market lows here. So if we start losing those pre-market lows, then we can actually possibly start trending lower as we're losing the daily 50. So be mindful of that. So basically line in the sand, our prior, this 381.60 area, really critical here. We start losing that. Our MACD here on our 15 minutes actually turning red. I typically, for my primary signals, I use 1 hour for my morning setups. Okay, and so our signal line is bearish. As of close yesterday, signal line down here is all bearish too. So, MACDs are bearish. So be mindful of that as well. So basically, yeah, you can even see here on the 1 hour, 381.09. That's your line in the sand. 381.09. We start losing that, then we're going to start. In all likelihood, we'll start trading lower today. So be quite mindful of that. We are actually put a lower print there post market yesterday. We were below this level, so be mindful of that too. Okay, and basically a rule of thumb that we have, if we're coming into the day on the daily, and if we're below our CPR, we're looking to the short side uh, on the markets, and so currently what we've got going on here, uh, uh, what was it, 381.80. Yeah, so currently we are trading right here at the bottom of our CPR. Okay, so typically anytime we are at or below our CPR, we are leaning here. Our group is leaning towards the short side until proven otherwise. So be mindful of that in today's trading. Okay, guys. So just a few things I'm looking at here. Um, yeah, tech looks like it's just going to be a bloodbath today. Not I don't know how bad it's going to get. Nobody does, but it does make sense that knowing that we've come into some pretty significant daily resistance and the earnings did not resonate very well with the global markets, it just makes sense that we're going to have a few days here for a reset for any attempt to, put the fifth leg, So basically, this looks to me like that we might have completed a wave five or a wave three to the upside, and we might be entering into a wave four to corrective phase. And I'm not saying the bullish rally is over with by no means, but I am saying it does look like we have entered a corrective phase. Okay, so be quite mindful of that. Like I said, leave some comments below if you're seeing something that I'm not seeing. And I appreciate everybody watching my video.